And let's talk about some of the calls that we should be making right now. Andrew, the world is long Europe. Is that the right call?
So we think from an equity perspective, not necessarily. Graham Secker, our European equity strategist, has been somewhat cautious over the last several months on concerns around what the strong euro will mean for earnings. Yep. Now, I think what's quite interesting is just really over the last day, some of the tactical indicators that his team follows have finally dipped down into buy territory. So that's something we have to watch in terms of our relative preferences. Currently, the US and Japan are our top global equity markets, but Europe has underperformed recently, and that's something we have to monitor.
Why are you long European value versus growth right now, Andrew?
Sure. So, look, I think the argument for Europe is that you have an improving economy and that valuations are attractive. That, I think, is the dominant narrative that I hear for European equities. I think if we look deeper into the market, most of the value in Europe lies within value. It lies within the financial sector. It lies within the energy sector. It lies within some of the other parts that make up the value index. So, in our view, that's the part of the market where the majority of the cheapness of Europe is concentrated. It's starting to get some positive momentum on a long-term basis. It's underperformed really for a decade, and we think that's starting to turn around in a long-term view.
Why are you short UK inflation? Why are you short the UK 10-year break-even?
Sure. So we think Brexit remains a challenging dynamic, right? And you're going to have UK politicians coming back from their holidays, going into negotiations in September, and we expect potentially more negative news flow. I think break-evens are one of the more optimistically priced assets related to the UK economy, right? Expecting inflation to remain at levels, really similar levels predicted in 2007.